Hello, Matthew. Welcome. Welcome to the live stream. Hope you're doing well. Good morning, Adrian. How you doing today? Oh, lovely. Sun is great. We had probably the worst day this winter so far. We're in lockdown, so can't complain too much, but yeah, probably a bit different to where you are. The Dow to drop 900 points. So has it dropped or will it drop? The Dow Jones, definitely a very interesting chart to get into today. Especially because of the kind of expansion we're seeing in this pattern. To really be thinking that it's going to drop a ton is probably not something that's realistic, considering that the Fed is definitely going to pump more into this market. They're not going to let it drop just yet for whatever reason. It looks like it may drop, but I think we've all been thinking that for a long time now. Well, for at least the last year and a half. And so far, all I can see is more expanding of a type 2 zigzag. So it's basically in line with the US dollar and what it's doing. So to me, this thing is like, it's reminding me so much of the GFC or the wave D before the GFC happened. Yeah, I mean, it has dropped since the highs. It's dropped 4%. So that's basically not much. Welcome, Luis. Good to see you from the Philippines. Excellent. 4% in the Dow Jones is nothing these days. Usually it'll drop about 4 or 5%, and then it'll rally 17%. It's drawdowns these days, they don't mean anything until the US dollar bottoms. That's the key component to the whole thing at the moment. Money printing, more stimulus, more strains of bacterias mean more money printing. So thinking that we're going to get a big crash now, it's probably the most expanded D wave imaginable. The one in between 2003 to 2008 is going to look like a little baby wave compared to this thing that's happening now. It's pretty crazy stuff, but we're living in pretty crazy times. So, you know, they're not going to let it crash just yet. Interest rates haven't bottomed yet. So to me, that is a big sign that more stimulus will continue to, you know, be introduced in order to keep this thing flowing. Welcome, Ali. BTC, I don't think it's going to dump much more than where it is now, to be honest. I think that the only change in the count was a 4545 count. So if the last low wasn't the last low, then the final low will be put in after this one. There's always one extra 4-5. If you've got your count wrong, it's usually because you missed out on a 4-5. So apart from that, not much else really. I don't think anything's changed in the view, especially because the US dollar, as I've explained to the members, is still in a very slow grinding out period where it's topping out. Well, I don't think the stimulus checks are going to end anytime soon. I mean, you got to think about it that this is a D wave. So once you get an E wave down, it's going to be more stimulus and more stimulus and more stimulus. So I don't, you know, if you're the kind of person who thinks that it's all going to crash now, then you better have a good reason for it, because, you know, we're in the midst of a pandemic and they're never going to let the whole thing crash because of a pandemic. The only thing I can see crashing this market is obviously when the end of the cycle runs out, when the pattern is done. But, you know, it's I don't know how they're going to look at it when it does happen. To me, it's the Great Reset, but there's more to it, you know. How do we not know that there's going to be another external event that occurs that causes, or is what they say is the reason for it, aside from probably a wave of defaults and bankruptcies and bailouts on the way? So I suppose that's the only problem here, is assuming that we're at a top now. And then you're going to have to understand that we've been thinking the same thing for a little while now, but that doesn't mean that it can't grow bigger, especially because the waves, they're not really indicating a top here. So why would there be one? I mean, looks can be deceiving. When it comes to the waves, looks can be deceiving for sure. I would not be surprised if it did crash next year toward the end of the year. The way I see it, it's kind of like, you know, in my opinion, in my honest opinion, it's going to be a shock that is probably relating to an inflationary shock that's going to cause it. So whilst we're still seeing a period of, I don't know, I suppose it's going to be like a deflationary event, but it's only going to prompt more extreme measures. So I suppose eventually they will have to take over. Whoever's in charge of the money printing is going to have probably full control of money printing, and they won't have anything to stop them from printing unlimited. I don't know if you saw that interview with Fed Powell on 60 Minutes, they admitted to having unlimited ability to print money. He literally admitted they have unlimited abilities. Nothing can stop them from doing that. So the only thing that I can see really kicking off a pretty big event is the bottoming out of interest rates in the mid to long term. And that's probably not going to happen until we see a bottom in the bond yield. And I'd probably say that's towards next year, towards the end of next year, even possibly a little bit, potentially at the end of next year. So. Okay, so once we do finally hit the top and we do get that crash that I've been talking about for a long time, it's going to be like the GFC, right? It's not going to last forever. It's not going to last that long, but it's definitely going to be the end of this correction since 2017. So, you know, it's not going to last long, but it's definitely going to be a turning point for not only the US dollar after the fact, but also it's going to be the start of a long-term uptrend in interest rates in the bond yield, right? According to the waves, right? So this is all based on the waves and the US dollar. So that's going to be, I think, probably a really important part of this whole thing. In terms of how long the bull run will run after the crash, I believe that's going to be a wave 3. So it's probably not going to be a short run. It's going to be probably a long-term run. And it's going to be one where prices will forever be elevated above current levels, at least in our lifetime, to the point where we get hyperinflation. So hyperinflation, like at the moment, we're experiencing an inflation shock, right? If you listen to people like, I don't know, Peter Schiff, you know, Gregory Mannarino, I suppose, they talk about, you know, inflation being transitory, but it probably is transitory because once this current run to the upside ends, we'll have a period of deflation, right? So transitory, yes, you know, for another year and a half maybe or whatever. But then as soon as the crash happens, it'll be hyperinflation that comes, you know, home to roost in terms of prices, because, you know, interest rates, when they bottom, what does that mean? Welcome, Don. Welcome to the live stream. So in terms of, you know, hyperinflation, it's basically just, you know, they're trying to control an overheated market. So they're gonna probably end up jacking up interest rates in the lead up to the crash, right? In the lead up to the top of this current move in the Dow Jones, right? For example. So in the last, you know, in the GFC, right before the GFC started, in 2008, 7, 8, and 9, they actually raised interest rates during that period, right? So that led to a crash because the market is very fragile. You can't pump so much debt into a market and then suddenly jack up the interest rates towards the top. And that's because they're trying to control, you know, the cheap money, because they realize the market's getting overheated. So then they, you know, pop up the interest rates a little bit, and that basically was a big mistake, but it's also just human behavior. So, you know, but the same thing is going to happen now, but it's going to be worse because of how much debt is in the system. Now, compared to then, we have not learned how, from our mistakes. Well, the Fed definitely hasn't. So well, they do. They do. Oh, and by the way, welcome, E. coli. Yeah, I know it's hard to believe, but it's either you believe that it's going to happen or you believe that everything's just going to go straight up in a straight line from here. In which case, there's no reason to think that anything's going to crash beyond this point. But at the same time, I'm looking at the US dollar chart. I'm not just looking at bond yields. I'm not just looking at the Dow Jones. Looking at cryptos, looking at all these markets together is painting that picture very clearly. And the US dollar is in a long-term downtrend, but it's not going to go down in a straight line like most people think. So this is going to be a very drawn-out process. And during that process of it devaluing, especially after we get the completion of this current move up in the US dollar, which has not finished yet since 2000 and, since the GFC, that's going to be the final straw, the straw that broke the camel's back in terms of, trying to keep inflation under control, I suppose, because I suppose that's what they're trying to do after all. But they don't really want it to be going out of control. At the moment, we're having a bit of an inflation shock. Well, US is having a bit of an inflation shock, up to 5.4%, I believe, were the latest numbers. But it's going to get worse until it tops. But by the time it tops, they're going to jack interest rates up. It's going to cause a shock. And then after that shock is done, okay, maybe interest rates will go up, but who's going to come in and buy it all? It's probably the Fed. So, I mean, that's perfect for them because not only do they get to, at the end of the day, after the crash happens, not only do they get to inflate away the debt, but they also get a chance to buy up more assets during that process as well, whilst the crash is occurring. Because who's going to default? Probably a lot of people. Who's going to go bankrupt? Probably a lot of businesses and companies. So who's going to come in and mop that up, hoover up all that, debt and assets, and then basically inflate away the debt? So yeah, you're right. So Adrian says, will bond yields collapse in 2 years? I reckon that they haven't bottomed yet. So I do believe that it's very close, but it still hasn't happened yet. So at one point I thought it did, but then I realized that it's basically almost there. So I believe that the next shock, which will come after this massive, crazy move up in the Dow Jones and move down in the US dollar finishes, then we'll get that shock, and then the bond yields will basically bottom at that point. Once that US dollar hits that peak, which is going to go up to eventually, to top out finally, probably for a good while, that's when I believe bond yields will have bottomed. And then that's when the fun begins in terms of hyperinflation and prices to the moon. And that's when basically cryptos will have finished their correction since 2017, and they'll basically everything will start shooting up. And in terms of what that means, that's what I think believe will be hyperinflation. So in a nutshell, that's what the waves indicate. Obviously, longer term waves are easier to determine than shorter term moves because there's way more in-depth, detailed wave price action that you can, analyze compared to, for example, like a short-term a month or two of price action in a really extremely choppy market, such as XLM or cryptos at the moment. But it doesn't mean much in the short term. I just think it's just a little blip, which eventually we will notice that it was a blip. But during that process, I do believe whatever the US dollar does is going to impact all, cryptos, the markets, etc. Because, everything is so sensitive now to the US dollar that it's actually pretty crazy how sensitive everything is. Welcome, Corda. Good to see you. Yes, so just talking about, basically the coming crash in the Dow Jones, probably not there yet, probably got still a good while left, probably to the end of next year. So, there'll be a period of inflation up until that point, and then there'll be a period of deflation. And then there will come the hyperinflation, and that's when you'll see wave 3 take prices north. And the US dollar will actually be in a real downtrend at that point. So at the moment, like as I've mentioned already, the US dollar is still in the process of completing a zigzag, an expanded type zigzag, since 2008, since the GFC. And this current move down in the US dollar is merely an E wave of, the B wave of that zigzag. So once this current move, finally ends, probably in another year or so, it's going to be drawn out, I believe. Then, we're looking at that crash, the US dollar getting really strong for a period of time. And then after that, the US dollar will begin a B wave down. And I wouldn't be surprised if that expands to the downside in terms of the pattern of the US dollar, but it's also part of a larger B wave. So the move down since like 87, about 87, is actually part of a B wave to the downside. So it's already in a downtrend, but this is going to, basically accelerate that move down a little bit more. We don't know how that will turn out, but it's definitely going to put pressure on prices. Well, it's actually going to make them go up exponentially. So that's how I see it. Yeah, so Europe, and that's the interesting thing, because well, if you think about it, right, it's the opposite for the rest of the world. The US dollar is the world reserve currency. So everything is against the US dollar. So during this particular period of time since 2008, technically the US dollar is in an uptrend, technically. All right, even though it may not seem like it, not until the US dollar tops out in this zigzag will it be done. So it doesn't surprise me that inflation is a problem around the world, because the US dollar has strengthened basically against everything else. So the way I see it, since 2000, well, actually it's actually before that. It's actually since 1987. Since around 1987, we've seen a move like a 1-2-1-2, right? A 1 from 87 to 2000 or 98, and then wave 2, from around 98 to 2009, and then another 1-2 from, the lows of the GFC up until 2017, 18, and then a correction in wave 2. So it's a 1-2-1-2 pattern. And that's basically getting ready for hyperinflation. That's around the same time as interest rates topped, but the market has still managed to carve up that pattern to the upside in like the Dow Jones, for example, even though the US dollar has been technically sort of strengthening, especially since 2008, but it's still, the market has still managed to work its way up to the upside during that time. So it's that expanding of the money supply to try to fight deflation, right? I've heard this being mentioned quite a few times now by quite a few prominent people, is that the Fed has actually been fighting deflation for years now. And that's why they print money, is because it's been more of a deflationary period of time since the 80s, basically. So therefore, it's kind of like, if you try to fight deflation by printing money, all you're doing is expanding the money supply. Now, the whole point of a deflationary period is that the production of goods and services hasn't exactly been the best, but all this money being pumped into the system is kind of trying to stimulate that production, and also get money to the money velocity to increase, right? So for the circulation of money. So therefore, all that money that's been kind of locked away, it's not, printing more money is not making the velocity of money increase. So that's deflationary. So up until the point where I believe the bond yield bottoms and inflation kicks in, hyperinflation will kick in, and all that money that has been stashed away over the years will probably come out and flood the market. And that's when I think we'll see a bottom in money velocity, because there's not going to be, money's not going to come cheap. So I suppose people are going to use it as an opportunity to invest, because prices will go up. And I suppose it's the chicken and the egg thing. I think it's one and the same thing. The future of food shortage, part of hyperinflation. I don't think it's so much food shortage. That would be a pretty grim picture to paint if you had to sort of think of it that way. I think it's more of a case that there will be more money chasing those goods and services, because like if you ever, like I keep mentioning this, right? If you ever look up Money and Inflation by Milton Friedman, or even watch Martin Armstrong videos, and even Mike Maloney videos on money and inflation, etc. It's not so much, it's mainly that money that's been put away for a rainy day for a long time now, because people don't have much faith in the system. It'll basically come out from hiding, and it'll cause like a Weimar Germany style hyperinflation. But I mean, once again, it's just, it's cause and effect. It's happened in many countries, and it doesn't really mean much to have $1 million when everything is going up in price. So really, is it really that we're getting richer, or is it just because, the money has been devalued that much? So it's a little bit of both, but you'd have to do your research more on that one. So I suppose it's just good to have the knowledge to sort of just catch some trends along the way and make some money, because, I suppose if you keep your money parked at the moment, you're probably losing money. But I don't know. Eventually it'll probably all come out from hiding, and the prices of things will go up because there'll be more money flooding the market. At the moment, I don't know if that's the case, to be honest. I think that this inflation shock that we're seeing at the moment is purely driven from all the stimulus that's being pumped into the system. But I don't think it's not hyperinflation at the moment, all right? I don't see how that can happen, especially during a time where people are actually probably a little bit more afraid to go all out and spend. Once this whole thing is over, you can probably bring in that whole pent-up demand argument and say that there was pent-up demand, and that's why now we're seeing a surge in prices and in hyperinflation, all that sort of stuff. Look, it's totally, you know, it's happened before, and it's happening in a few countries at the moment. But how will the Western world, handle it? It'll be very interesting to see, especially in a world where we're moving to digital assets, digital, electronic money rather than the physical money. What will that mean in that world? That's going to be interesting because that's new also. So, right. So I suppose I should just talk about the XLM chart now before we move to the US dollar chart. So today I posted for the members basically just a bit of an update on the view on the current move. So I'll share my screen now and just go through a bit of that. So here we can see that my count has changed somewhat. Not on this chart. Is it this chart? Oh no. One sec. I'm on the wrong chart. That was the old count. Right. Okay, so when it comes down to it all, so my view is this is part of a zigzag that's still yet to complete, okay? I won't go into too much detail on the bigger picture now, but as per, my latest update, this is, it's become a little bit apparent now that basically wave 3 did end at the lows, the previous low. So I took that same view to the lows, to the current price action that we've seen since that low. And basically it's almost like we're getting a repeat of the same thing. So this here being a wave 4 and a 5, this same thing being here. It's a smaller version. It's basically because 1, 2 happen really quickly at the top, at the highs. So you didn't get any chance for alternation to occur because the market was in such a free fall at that point in time. So we didn't get like any alternation in wave 2s. We got all the alternation occurring at the lows. Okay. So we got basically 4, 5, 4, 5, just to make up for the lack of alternation at the highs. Okay. So basically, just to answer that quickly, the BTC is the same thing. It's not exactly the same pattern, but it's basically in wave 4 of the C wave of the B wave. So initially I thought the B wave had completed, but I might touch on that shortly, actually. We'll just save that one for a bit later. So all right. So I'll just yank this one out of here. 1 second. All right. So as you can see on that chart, right, it's basically just a 4, 5, 4, 5 occurring. Okay, it's a smaller version of that corrective pattern. If you look at the RSI at this point in time, it's oversold. Okay, it's oversold. So it's pretty oversold at this point. Now that's a 4-hour chart on the RSI there. So you can see that wave 3 was, the sharpest lowest point of this move. So whether or not this current move takes us down on the RSI to that point there, to me, it looks like, I don't know, it's kind of just gone into oversold territory pretty quickly, and it doesn't look as sharp as the RSI back in wave 3. So you know, if you go to the daily chart, it hasn't done that yet. So for me, this is obviously going to be better in hindsight, but wave 5 technically should be weaker than wave 3. So I don't think we'll make a new low on the RSI in that case. So yeah, look, RSI okay for hindsight, not really good for, you know, in the moment type price action. So therefore, to me, it's kind of like a little bit of a moot point. So. Yeah, so let me just go down to the small degree. So on this one here, this can be the only thing that's happening here is that this was a zigzag. Zigzag A, B, C, D, E. So that's wave 4, looking for 5 wave moves. We're seeing 1, 2, we're in 3 now, and then we'll see a 4, 5, and I think that'll be it. I don't think we're going to 10 cents. Would be nice if we can get 10 cents, but I don't think that's going to happen. So in saying this about XLM, right? So CDE pattern, if you look at that pattern there, pretty cool pattern, looks like a zigzag, very tricky. If we go to the US dollar, right? If we go to the US dollar, let's go to the daily chart for a moment, okay? So the daily chart of the US dollar is a CDE pattern, okay? CDE pattern. It's the same pattern that you just saw in reverse in XLM, okay? It's actually an interesting pattern once you get to learn it. And this is actually like a larger version of that same pattern. So once we get, you know, finish E wave down here for B, we're going to get one last move to the upside like that. That's going to be the shock. It's going to be pretty interesting move. It's going to be straight up, one last high, and that's it. US dollar tops. So that's when I believe interest rates will bottom, right? So at the moment, we're still in that CDE pattern. So it's not over yet. It's not done yet. But it's the same kind of thing that happens towards the end of a move. You know, there's probably a bit of, you know, weakness in this market. It does want to go down, produces what looks like a zigzag. Then you get a final move up. It's the same thing as XLM. You get a CDE pattern, you get your last low, and you can see that there's a lot of strength, you know, especially for the last move up in XLM. Welcome, Johnny P. Morning to you. Same thing if you go to XLM, right? You can see that obviously that's a small pattern in the small degree in terms of the CDE pattern, but I mean, you can see that, you know, after we had a strong move down from the highs, you got this choppiness. You know, it's basically strength in this market. This market does want to go back up because it's not done yet, right? If you're going to see a crash happening here like this, you'd see, you know, probably like a small wave 1, a bit of chop, and then you'd see this thing get, you know, more stronger as it moved down. So this to me is just, it's still in the process of bottoming out around, you know, 20 cents. You know, I did talk about, you know, buying in at 25 cents. To me, 5 cents, no big deal. When we go to 80 cents, it won't make a difference. So I'm definitely going to move into a stable coin at 80 cents, simply because, you know, we're going to see a move down in the USD to complete a zigzag, and it's just basically going to be time to take some profits until we see another dip down again. And the next step down might actually be a little bit more severe than this one. I do believe we'll get one more move up and then it'll be like this somehow. That one may go to 10 cents, right? I do believe that one may go to 10 cents. I cannot tell you for sure. Morning, Joshua. Good to see you on the live stream. Thanks for catching the live stream. So, you know, basically it's XLM is bottoming out. It's part of, you know, the pattern. It's the same thing as the US dollar. So if we switch to the US dollar now, so it's part of a zigzag move that we're seeing. Basically, you know, the D wave, A, B, C. So it's just this move in here. Pretty cool if you look at this. So you see a 3, 3, you see a 3, 3, right? You see a 5, you see a 5, you see a D. Now this D is a really compact D, but this D that it's actually, that's because it's a D inside a D, right? But the whole move is a D. So I just like to observe how a pattern like that, which is the same pattern within a pattern, it's like Russian dolls, right? It's just interesting to see how that one has, you know, it was sharp, but it's still a D, and it's inside a D. I just find that a little bit amusing there, but you know, this move can't go above the start of D until it creates that move down, and that's the move I believe will take us to the highs again. Okay, so this is a really in-depth analysis of the US dollar. So how can that possibly go higher when it's part of a move that's still going down, right? And that's the whole thing about learning the waves, is that, you know, you get to use this information to your advantage rather than just say, I've been looking at some chats in, you know, on TradingView, you know, some people who are shorting the hell out of cryptos at the moment. And it's just like this mentality of shorting just because something's moving down. When did they start shorting? Will it keep going? Do they think it's going to keep going down? Don't catch a falling knife, all that stuff. I don't know. I think it's a sign. It's a contrarian, you know, sign that maybe you're probably a little bit early in thinking the whole world's going to end. Welcome, Miss Renan. Luis, yeah, stable coin at 80 cents, in my opinion. I do think that that's what I'm going to do. So, and that's simply because of this, right? If you understand the pattern in the US dollar, you'll understand what's happening in cryptos. So the thing that I find the most interesting about what I said before, like at the moment, everything is so sensitive to the US dollar, you know, the movements in the US dollar, where we could see something like this move up since, you know, May, right, cause such a problem for cryptos percentage wise, right? That's like 70% from the highs down in XLM, right? And it's only what, in terms of percentage up, you know, like what, 5%? I mean, that's pretty crazy stuff when you think about it. Everything's really sensitive to the US dollar right now. So imagine what happens once this bottoms and that big move goes up, right? That's going to cause a few problems, I think. So the Dow Jones losing support. Well, you can talk to the Fed about that. I don't think they're going to allow anything to happen just yet. It's not high enough yet, right? They need to pull the lever. They need to you know, it's not time yet, right? We're still in the middle of a pandemic, and I don't think they're gonna pull that lever just yet. But like I said, this is an E wave still unfolding. Wave 3 hasn't even completed yet. We've still got a couple of moves left before we get that happening. So I don't know. To me, the way I see it, it's kind of like, we're going to see, a move back up in XLM, and then we're going to see another move down in XLM, right? And then I'll probably want to buy back in when that happens. And then we're going to see another couple of moves up in XLM, right? Now that would be a 4, right? And then we're going to see like this sort of thing happen for a 5. Unless the pattern turns out to be something else, but because of the way that this is unfolded so far, yeah, I'd have to think about that if it happens. But if you were to look at this like it was maybe like, wave 4 of wave 3, like if you want to play devil's advocate and you wanted to say maybe this was a wave 1, 2, 1, 2, 3, and then 4 still in progress, and then 5 or something, potentially. Yeah, I'll cross that bridge when I get there, but we're going to be using a whole bunch of charts to come to that conclusion. So because you sometimes you're sure of something until something changes, etc. But once this gets to be a certain length, I suppose we'll have to wait till that happens. Well, but that's the thing, that they're not going to stop printing money. So as I mentioned before, they've admitted to having full control of basically printing money, the monetary system, and they now have the ability to print unlimited amounts of money. So of course they're going to keep doing that. They're not going to stop. The only thing that's going to break their little scheme is if interest rates start shooting through the roof. But they're going to keep pushing that down as much as they can until there's just no more pushing it down, that interest rate, right? The bond yield. And I think that's when the bond market will finally top and we'll get a pretty interesting, some pretty interesting things will happen. I'm not too sure what will happen after that to the bond yield. Will it go straight up, or will it sort of, yeah, that's the thing I don't know. Nobody can really know what's going to happen to bond yields after they do bottom. Will they go up in a straight line, or will there be a period of, I don't know. To me, the bond yield chart, there's been a lot of strength in the bond yield chart, even though it's in a downtrend, because of the choppy nature of the move down since 81 in bond yield, right? And because I'm expecting a C wave to happen afterwards, it's going to be I think it's going to be pretty meaningful. So they're probably waiting for that to happen, so then they can, basically buy everything up at that point and then inflate their debt away. So. Matthew, smallest degree, what is the E wave saying? When is B going to top? Okay, so if you're talking about the D wave, then that one is very close now. Okay, so we know that it can't go above that line right there, right? The one, where C wave ends up here, the red one. So this is a zigzag here like this, right? So we need to produce a zigzag for wave D of wave B of wave 3 before we can see the C wave down for D, and then see another E for the B wave, the full B wave, the full zigzag, right? So you've got a zigzag within a zigzag here, and that's the D wave. The D wave expanded, right? So that's what's happening there. The wacky thing about this move is that is the expanded nature of this wave 3. But I suppose that's why it's almost like they're struggling. Something's struggling to make this go down. So I think the last move up wants to happen in this zigzag. It's showing signs of strength, because I suppose that's why, you know, an ending diagonal or whatever you want to call it, right? Call it weak wave E. I suppose that's why it starts producing this type of pattern rather than this type of pattern, right? Because it wants to, there's a lot of strength. So it can't produce a 5-wave move. So instead, it only gets to produce like a 3-wave move and then correction, and then a 3-wave move, except this one is, you know, obviously showing a lot of strength, but then it has to complete its pattern. And it's not easy for it to do it. Otherwise, it'd just be a straight 5-wave move down and we'd be done. But what's happening in the Dow Jones is not a 5-wave move. It's a, you know, expanded zigzag. So I suppose this is all contributing to this choppy pattern that we're seeing up in all markets since March 2020. Otherwise, it would have just been a straight 5-wave move up, but it's not. So, hello, Andre. You believe also in $160? Okay, so once upon a time, I did say $160. Now, to me, there's no point trying to forecast a top of a corrective pattern. Okay, so previously I did think that potentially the corrective pattern would be over, but since then, you know, especially after understanding this US dollar pattern in particular, it's become pretty obvious that, you know, this is the last move down in the US dollar before it tops. So the one move that's going to go up to finish this pattern is going to be probably in line with the E wave that occurs to end the correction in cryptos, you know, since 2017. So to me, after we finish that large correction since 2017, that's when we can expect prices to go pretty high, right? Probably past beyond $160. But it's going to be a large uptrend in all markets. But that's still a while off. In the medium term, short term, I think we should just focus more on the current patterns rather than, you know, because you're in a bear market. Now, when I say bear market, I mean corrective pattern for wave 2. So there's no point. There's probably a good reason to, you know, get to the top of cryptos again and then cash out, wait for another crash, buy up again when prices are low. And then that move might go a bit higher, yes, most likely. But then, you know, after a period of time, it's going to come crashing back down again. So there's going to be a bit of fluctuations going on in the markets, especially cryptos, percentage-wise. So this is a time for accumulating, you know, making short-term trades, buying and selling, you know, and then buying and selling. And then eventually it'll come to a point where it's time to buy, to hold on for a little longer. And that's definitely going to be in line with the top of the US dollar. So, you know, in a nutshell, that's what I'll be doing. And that's my aim, is to sort of track that along the way. These short-term movements to me, they don't mean much because they're part of a larger pattern that's still unfolding. So, you know, making some adjustment on some, you know, short-term wave counts, to me, you know, if you can triple your money in a move up, that's a good thing. And then take profits and then wait and then buy even cheaper potentially, you know, and then do the same thing again, except, you know, just tracking the waves. So 160, you know, like, are you a hodler? Like, it depends. Like, if you want to get to 160 and you're hodling from this point, you're probably going to miss a lot of opportunities to make short-term gains on fluctuations in the market before it gets there. So it depends if you want to learn the waves for that particular reason, or you just want to sort of, you know, follow somebody who's sort of trying to do that. Well, at the same time, you've also got to understand it. It's probably better if you know how to do it rather than just following someone else. So As my members know, it's always the interpretation of the waves that, you have to be good at it, right? You have to give your best interpretation and use it wisely. Sharing as a group is good because you get to share ideas. I suppose I'm trying to get that community to grow in order to do that better, more effectively. But at the moment, it's kind of like I'm just trying to give you my ideas based on how I read the waves. Small term waves, like short term waves. It's not too hard to get it wrong. Does it mean that it's completely off? I don't think so. Not typically, especially during a corrective bear market. Once we get to the end of this entire correction since 2017, well, I'll be a hodler. I'll just be hodling. So to me, it doesn't really matter because that point will eventually come and it's going to be pretty obvious by the time that happens. So there's no real reason to think that it's going to get away from us. It's just going to explode and we're going to miss out on making money and making profits, right? I don't think that's going to happen. I'm really certain that that's not going to happen. So. So E. coli says, so when the correction will end for wave E? I'm not sure what you mean by that. Yeah. So yeah, I'm not sure what you mean. So at the moment, if you're talking about this chart here, so you're talking about the end of the larger correction, right? The one that's coming, once the US dollar bottoms. Sorry, tops. Once the US dollar tops. Once the US dollar makes another high, beyond the high of 2016, 17, that time, that's when I would be buying, right? That's probably a good time to buy. But until then, there's still going to be other opportunities because that pattern is unfolding and it's very choppy and it's going to produce moves up and moves down. And as you've seen, a small move up in the US dollar can produce 70% downturn in, XLM, for example, right? So, and because we're still yet to see even more waves play out in the US dollar, then that means there's going to be a couple of more opportunities to make interesting gains before that time comes when you want to be out, wait for that US dollar to top whilst everything else tanks, and then you buy everything or you buy, whatever you want to own for the next, potentially like, year or two, or depending on how long that move goes for. Impulsive moves tend to move pretty quickly. So if that's coming afterwards, then I'd be a hodler more than a, short-term trader, because obviously there's, markets only trend 30% of the time, 70% they're in correction. So what I'm saying is you want to be sort of getting in and out of the market at certain points in time during that during that 70% when it's correcting, just to accumulate, more coins, I suppose, as you go. And then by the time you're ready to, buy again after that move, happens, then you can buy more. You can buy more coins. So that's obviously the whole point of this, because, you want to be sort of make sure you have as much as you can once it's actually time to have as much as you can, rather than freaking out along with everybody else. And, to me, if it's a real wave three that's coming, which I do believe it is, then it's the wave E, the last move in the correction will probably be pretty severe, especially with what I see the US dollar doing in the future. It'll be pretty severe to the point where a lot of people might be a little bit too scared to buy at that point. So I think that when there's real fear, that's probably the best time to buy, because, prices will be cheaper and you'll be going against the crowd. So you'll be that contrarian trader. And I suppose that's the whole, point. A lot of people like to say, oh, you buy when the trend is continuing, continuation of trend, whatever. But, by the time that happens, it's going to cost you, right? If you want to be buying at the lows, you got to have a good idea of what to use as an indication that you should buy, rather than, I don't know, relying on other forms of analysis like your MACD or your oscillator or whatever. If you understand the patterns, you understand that they occur at all degrees of trend. So therefore, on the larger degree, it's the same thing. All right. It's actually better on the larger degree because you get more of an opportunity to, analyze the markets at, having spent years looking at the corrections since 2017. By the time that happens, you have a lot of confidence that this is actually what it is. This is what you're seeing, right? Compared to, like, if it's a short-term move, like a month or whatever, and you're like, oh, is this the right pattern? Well, it could be subjective at times on a small degree, but on the larger degree, you've had so much time to assimilate that, to marinate on those patterns, that you by then you're like pretty sure about it. So, I suppose it just comes down to your knowledge of the waves and the confidence that gives you, right? Because it's all about confidence, right? I'm sure there's a lot of people out there that have a lot of money to invest, but they don't know when to invest. They don't know what to invest in. They don't understand if, how markets operate, do they trend together? What trends together? What's correlated? What's not? So I don't know. To me, it's pretty obvious that everything is against the US dollar. So if the US dollar gains strength, I mean, everything else is going to have a bit of a setback. But once the US dollar starts to really weaken, like I see it happening in the years ahead, then that's probably going to be really bullish for a lot of assets. So that's basically in a nutshell for this one. Obviously, be keeping an eye on this one. This move up, it was not even that deep of a correction. So to me, this is just wave 4. Like I said before, it's 1, 2, 1, 2 at the small degree. There was no alternation towards the top. All the alternation came towards the bottom, which is because, obviously the move started off pretty sharp at the highs, sharp to go, it was quick to go down. So no opportunity for any real correction to occur. So the majority of the alternation occurred in both wave 4s of the last moves. So 4, 5, 4, 5, 1, 2, 1, 2, 3, obviously being the sharpest, which ended down here. So wave 4, wave 3 had to produce alternation with wave 4. And then after wave 3, the next wave 4 had to produce alternation with the wave 2 at the top. So I suppose this is why we're seeing the market look like this now. It's because of that reason. And that's something that I obviously mentioned in the program. But yeah, I suppose we just have to wait. In terms of confirmation now for this particular, wave, is just basically the last high, right? So if that's the E wave up here, then that is the 25 cents, 25, like 0.25617 is pretty good indication that this move is done to the downside, because obviously that's a break of wave 4. And that'll basically just, yeah. So I think we've seen wave, 1, 2, 3, potentially just finished. You probably get a bit of bouncing around here in terms of, corrective waves, and probably get that last move down, and then we'll probably get a poke back up. If you see something go back up stronger than what it went down, probably a good sign. But for me, I'm holding on for now. I just see this as another, 4, 5. That's it. So, yeah, so that's going to coincide with the US dollar topping out and, you know, continuing lower. So yeah, I have no doubt in my mind that the US dollar has still got basically some more downward movements coming. So for those that want to short cryptos at this point, well, I hope you know the US dollar chart, because that one is probably important. So I would definitely be paying attention to that one. All right, so I'm going to wrap this one up. Hopefully you guys have found this one interesting, and I hope to catch you on the next one. It's been good to do this, and always a pleasure to chat. So thanks for watching.